Hope everyone's doing well and welcome back to another weekly outlook. So cool. This is actually my second take on this weekly outlook. Just happens to be my luck. Before I used to get issues with my MacBook because it was quite old. Now I've even got a whole new setup with a Mac Mini, and for some reason my Mac just decided to stop working. I recorded quite a, what I would call maybe a bit of an intense video for you guys. Just touched on quite a few different things, right? And I'm going to try to brush over the same sort of topics quickly now as well. Of course, it's a weekly outlook. I don't want to drag it out too much. But I was just having an interesting conversation with someone from the mentorship, right? And what we discussed was two big things, right? Two main things. And we'll quickly touch on both of them. The first one is the idea of evaluation, right? What do I mean by that? So, of course, I would assume that a lot of you guys that are, trading in general, whether you're learning, whether you're profitable, right, whether you're, on the way, you're doing some sort of evaluation. That might look like sort of just even really and truly doing your weekly outlooks, right, is a form of evaluation, just understanding what happened in the previous week, what you want for the next week, etc. But I think a bit more personal evaluation. And when I say this, I don't mean in a sort of, in a wishy-washy way, like I'm not trying to give an inspirational talk here, but be very practical with what you do, right? Like just very simply put, an easy way, and we talk about this a lot, we talk about data collection and the sort of things to review and look over. Now let me give you guys a good example. I know I mentioned this in the last video, but now that Feb has ended and we're in a new monthly candle, we'll just quickly touch on it again. So January, very great month for the mentorship. February, not so great, right? So January, we took 6 trades and ended up with a worst case scenario. When I say worst case scenario, meaning you hit the first TP, etc. So ideally, I would hope, everybody else in the chat, I myself included, made more than that. Right, but let's just go with that for now. It was 11.4. And then in Feb, we actually hit a bit of a roadblock. So we started with a win, took 3 small controlled losses back to back, took a break even in the middle, and then another 3 losses before the months ended up. And in the end, the result is only minus 1.50, right? So the thing is, right, the practicality behind it isn't as simple as seeing it on paper. Like, when I see it on paper, I was like, 8 trades, fair enough, it's a lot of losses, blah, blah, blah. But, we're not down that bad for the month, right? And if we average out between the 2 months of the year so far, is basically 5R on average per month, right? That's just something to bear in mind. Because you see with trading, there's no guarantee that you're going to have a profitable week or a profitable month. So when you have a good month, right, just bear in mind that's going to sort of balance out in a way, right? You may hit price action that's not as good, or just times you might have a losing streak down to whatever cause, and just having the understanding that both ways it sort of balances out. When you have a good run, you can also have a bad run. It's just about minimizing damage and just being smart with everything that you do, right? But anyways, back to the point of evaluation. As you approach, again, like the end of the month, end of the week, make it a practice to go over yourself. Just understand why you took certain losses, right? Are there sort of any behaviors that you're exhibiting that are sort of negative and you're doing more of them recently, right? I don't know, perhaps it could be something as simple as someone who trims their stop losses way too early, gets stopped out, and then price does whatever. Now, it's very hard for me to give a very, sort of specific example, because the whole point that I'm trying to make here is very personal to you when you do this evaluation. The whole idea is that your raw data, assuming you're doing your data collection properly, you'll understand, I'm trading this pair, even understand this is when I traded it, this is the day, this is the session, having the actual journal of why you took the trade, and understand how you taking reasonable setups, like, are you taking stuff that you should be taking, or are you just FOMOing, or just sort of gambling in a way, is like a good basis to start with. I would hope that a lot of you guys, if you've learned technical analysis, you're taking proper setups, and then you can sort of start breaking down each part. It's like, we can break it into sections in terms of ability, right? I don't know, for example, like, when you have a sport, we have the idea of like, you need to have some sort of mental IQ, but you need physical attributes as well. Similar with trading, you're going to have your technical attributes in the sense of like, you know, your analysis, is it on point? Are you doing things correctly? Are you doing them in order how you know you should be? And then the idea of your risk and trade management, your account management, right? All of those things, they come in together. And when you're doing these evaluations, right, the aim is to get better. The aim isn't to get perfect instantly, but it's to pick away at things, right? Slowly, and improve so that you stop repeating the same mistakes. That's one of the easiest ways to improve in anything, right? Not even just trading. If we take sports, even just really and truly any industry, the idea is that, you know, you get better, you review your mistakes, we try to avoid those mistakes, then we get a bit more better. And, you know, is with the idea of these breakthroughs is, you know, if you keep doing it, you're just going to get more and more refined. Like, even just the idea of profitability, I say this quite often, it's not an on and off switch. Like, you know, it's not, oh, you're just profitable or you're not. To a degree, maybe to somebody from an outside perspective, it's like that. But I would argue that you get more profitable as you go on. As you become more refined, you become more disciplined, more intuitive in regards to your trading, you just get better, right? And of course, that doesn't excuse, you know, you might have bad runs, but at the same time, remember, like I said at the start, it all balances out. Sometimes you might have bad runs, but you might also have great runs, right? So never forget that you can also have the great runs when you're in one of the bad moments. The same way when you're in one of the good runs, don't forget that this can turn around very quickly, right? It's just how the markets are sometimes. So again, in regards to our own evaluation, or rather the evaluation for the sort of trades we've sent to the mentorship chat, you know, if I look over them, there's no genuinely sort of frustrating loss. Maybe one of them in particular where EU was 1 pip from take profit, I think, and then it reversed all the way to a minus 0.6% loss, which was a trim stop loss. But of course that reversal was quite quick because the range we were trading wasn't too big, so it's not something that I'm majorly hung over. But you know, it's a little bit of an iffy one, but it's just something to bear in mind. You know, sometimes when price is just that close to your take profit, just close it. Like, something that's happened in past as well. I've seen it enough times. You're targeting a certain liquidity pool, price gets right next to it and then reverses back. Right, it might not reverse as hard as it did in that particular example, but it has the ability to reverse. And, you know, when it has that reversal, then you think, let me just hold this, you know, I'm not going to exit. And if it keeps going against you, you might end up doing silly things. You know, if it closes you at break even, you're looking for 300, blah blah. There's a lot of things to it. So it's like you're trying to do these evaluations, one, to study your own psychology and improve it, but two, to actually see that the real raw data and see what it's telling you. You know, if, for example, let's say you trade multiple pairs and one pair in particular is just giving you a lot of losses, then, you know, maybe you just shouldn't trade that pair, right? Or maybe you're doing something wrong when it comes to that pair. So again, like I said, guys, I could go on forever. There's so many examples we can give, but they're going to be so unique to each person, and that's why it's so important you collect your data, you do these evaluations, so then even if you've had a good or a bad month, when you're getting into the next month, you have something to improve on, something to just bear in mind, and something to focus on. You know, I'm going to make sure this month, you know, when I'm taking my entries, I'm not as sort of greedy with the entry. I'm willing to enter earlier, in the sense of that, you know, before I kept waiting for price to come to the 0.79 OTE, it rarely does that and it leaves me behind. But my bias is right. So if I was just entering at the 0.62, I probably would have caught a lot of trades, right? That's a good example of, you know, a practical thing you can do to sort of improve your trading. So cool. So yeah, there was meant to be two things. That's the first one, which was the evaluation. The second one has completely slipped my mind. So if it comes back to me, we will go back to that. But let's get into the actual weekly outlook. So cool. Already got a lot of markings on my chart. Like I said, guys, I already recorded this. I hate having to redo them because sometimes it gets very intense when I'm doing the initial take. Not intense, but I'd say, you know, maybe passionate is the right word. And then it's annoying having to come back and redo it all again. But anyways, let's get rid of these first. Right, let's start from scratch. What we seeing on our charts, what do you want to target? So as we know, new monthly candle starting as we go into March. Feb's monthly close is not very convincing. It's not the worst, you know, nothing like January, which was extremely untelling by the time it closed, but it's not the greatest. I would have liked to see this candle close a little bit lower, a little bit blockier, and it would have just made me a bit happier, right? It's not the end of the world. Like I said, it's not the worst close ever, but, you know, it would have been a bit nice if it would close this way. For me, for the time being, the draw still remains this monthly fair value gap, right? Now, as we can see, this week, I would assume caught a lot of people off. We traded back into the range, right? And we've come back to this weekly order block, and we've also swept the previous weekly high. This was as the week was closing out, right? So now going into the next week, what are the sort of expectations? Now, one thing I want you guys to consider, remember, right? We are in a clear downtrend and we have a clear bearish target. So we remain bearish. So when we get these sort of retracements, you know, even though prices, for example, print the fair value gap here, you don't need to necessarily assume, oh yeah, this is it, this is the reversal going to run back up or anything like that. No, these retracements are usually going to be what? They're going to be sweeps on liquidity, right? So then you can continue targeting the other side. All right. So for example, here we've run the previous weekly high, and I would assume when the new week opens, we might run it one more time. So what's the sort of plan going into the new month? Now, I would argue that we have the opportunity to place the high of the month pretty early on in the month, right? For March. If we take the range from this high to this low, which was a low that, you know, sort of broke the range. Why this low in specific, right? So we had a high, an obvious swing high. Price came lower. I know it made this low, but this low did not break the previous low. So this this new low, this is the one that sort of broke the range to high to low. And what we can see is we didn't really get a nice retracement, right? You didn't get a deep retracement. So when we have scenarios like this, what we can actually consider is now when price pushes slightly lower, we can mark this as all one big range. So this then becomes internal liquidity, right? This high here, which is in the discount, and price can push past this, sweep it, you know, maybe even go into the premium. Although in this example, it might not necessarily reach quite deep into the premium. And then from there, we get another reversal, right? So particularly for the week coming, what I would like to see is very similar to this scenario. This is a bearish order block being created and the expansion follows. I would like to see something very similar for the upcoming week. And I would like to see this current weekly candle, or rather the one that I just passed, be our bearish weekly order block, right? If the next candle can come, open and, you know, potentially sweep this, push a bit deeper into this weekly order block and then reverse, you know, that's a great place to put the high of the month, right? And the high of the week as well. So one thing I would also bear in mind, and I would not disregard by any means, is this rejection block. I don't think that we will reach this, but, you know, just something to bear in mind, that price can work its way towards here. Okay, like that. And that is our weekly bearish order block, right? Now, in regards to how the weekly profile might form and, you know, what sort of idea we can get now, we've left a nice sort of 4-hour consolidation down here, right? And when we had this consolidation and it's near our sort of liquidity pool, it's very likely we'll get in a form of AMD, right? So accumulation, we've started manipulating higher. We've actually ran the previous weekly high. And from here, I want to see, you know, that move lower, that reversal after, of course, we placed the high of the month by potentially pushing a little bit higher. Now, the way something like that could play out is, you know, maybe price will come and IO-fed this, run back to the previous weekly high, or maybe dig a bit and then reversal. Or maybe price will run higher and then just immediately reverse down. I would like the thought of an IO-fed and then higher. The only reason being, you know, of course, you know, when we talk about these sort of scenarios, a lot of the times you might see people draw these pathways for price, right? Okay, let's say it runs here, runs higher. Why do I like the idea of this? Because then we can get very textbook market structure shift, potentially on, like, you know, something like the 1 hour. And then, yeah, very textbook distribution, potentially, right? But really and truly, this, you know, drawing this out and having this very specific expectation for price doesn't negate or do much for us. It's a good idea to have if it plays out, it would look really cool and whatnot. But when it comes to our sort of intraday trading, all that matters is the read on your sort of daily candle, really and truly. If you have a good read and a good target on your daily candle, it can work. For example, if the Monday comes and trades into this daily fair value gap and clearly IO-feds it and starts trading this way, then you know this candle's high, right, which is the previous daily high and also the previous weekly high now, is a great target, right? So despite our bias being sort of bearish from here, if price gives you a clear signal, this is a sweep, displacement higher, and you know we're going to target this, you can do that short-term target, right? You can trade towards that if you're confident, if it's a higher probability setup. And then once it runs this, then maybe we'll get the real reversal, right? And when I say real reversal, I mean essentially the expansion of the month and the week. So yeah, that's basically the scenario we're looking at, right? Now, this is backed up by the US 10-year. Again, I've got some markings from when I previously made this outlook. Very, very nice candle. This is a very textbook reversal after sweeping some liquidity and then displacing down, absolutely hammered down, solid candle, which is what we like to see. And we are in a monthly order block, but I'd anticipate that price trades through this. Now, the way we can work this is that we have a short-term target here, right? This sell-side liquidity will be a draw. When price, takes this is when we might get a retracement, or maybe we get the retracement and head down, right? Both scenarios are to be considered. So when we come on a weekly time frame, again, very nice fair value gap. You guys can see why I've used this candle as an anchor, right? Sweeped a lot of liquidity and then displaced down, starting this move. And what we might see in the upcoming week is maybe we won't get a major retracement. Maybe first could see something like US 10-year pushing down, taking the sell side, right? And then maybe later in the range when this is left as a fair value gap, something along those lines, and whatever. Again, we don't need to be too specific about it, but either way, the expansion is pointing downwards. I'm very confident we move lower from here. Are we going to move all the way to the range low? It's hard to say, right? There is a large monthly fair value gap in the way. This candle's monthly fair value gap, even though this has been slightly swept into, of course, it's still a fair value gap, and we want to see how price treats this. There's a, possibility that price hits this and trades higher, right? Just something to bear in mind from a sort of like analysis perspective, purely, not including fundamentals right now. There's that chance that this could just be like a sort of OTE and price goes higher. Now, how do you go about that? All we want to see is price trade into this, and then when it gives that retracement, we want to see, does it offer continuation down, right? When it comes down into this, is it immediately skyrocketing this way, or is it, retrace and then starts coming down again? Because if you start getting that second leg through the monthly fair value gap, then it's very likely we're heading for these lows, and then most likely after that, these lows, which is what we want to see, should help our sort of DXY hypothesis, right? Now, if we come over to economic calendar, red folder on the Monday for the USD. Of course, first week of the month, we know it's going to be NFP week. Nothing on the Tuesday. ADP, which is the precursor to NFP. We also have a 3 p.m. news folder, a couple other orange ones scattered around. Thursday, your primary mover, right, is going to be, or at least I would say the big mover that we want to pay attention to for the euro specifically, is their interest rate decision, and then unemployment claims as well. And then lastly, the biggest mover of the week is going to be our NFP and Powell speaking as well on the Friday. Right, both going to be very interesting. So cool. Let's go on Euro GBP. Now, Euro GBP for once has actually made a move as well, very nicely. You guys can see on the monthly candle that's just closed now, very big wick and then solid move down. Targets are in reach, right? Previous monthly low right there, next sell side target, and this right here, right? Very, very close. Weekly candle, very similar. Clear move down. I would anticipate continuation from here. Considering our proximity, I wouldn't anticipate anything like a previous weekly higher sweep, etc. And we have a very, very nice daily range, which I've marked out. And it's likely we play this daily range and trade lower. We've got equal lows here. Depending on where price opens, you may get a sweep into this, daily fair value gap back into this range and then lower. But I would say it's very likely price completes this market maker sell model, which we've been watching for quite a while, especially with the Thursday news for the euro, right? If they come out with any sort of soft decisions, meaning, they're cutting the interest rates or even just not hiking, then it's going to propel price this way, right? So just bear that in mind when it comes to trading EU and GU this week. Okay. Bitcoin. Chart that has a lot of people scared and screaming, right? Guys, it's not the end. Trust me. This is just how the crypto market is sometimes, right? So we've got a very nice solid blocky candle here, and it's tapped just about into the discount. But seeing where prices closed, it's very obvious. It's likely we are going to come and sweep that previous monthly low, I would say, from here, right? We've dug into discount. I think we'll dig in a little more. We tapped to about, high 70s. So yeah, that's about 78. I think we can even come tap into, this move down here, essentially an order block down, maybe even into the high 60s, cause a lot of panic in markets, right? But one thing to always bear in mind, right, is that this is what we like to see. Price has a very strong move down. So accumulation, very strong energetic manipulation is what we like to see. And in turn, whenever the distribution begins, it should be smoother, not as quick as the manipulation usually, and will, of course, go the other way. So from where price is right now, I would anticipate that we hunt this low. Maybe price will stay here for a little while, accumulate. It won't happen straight away. It's just how Bitcoin is. But I would anticipate one more leg lower at least before that reversal back up. I do think that the high for Bitcoin is not in. I do think we will push higher. However, it can take a lot of time. It takes a lot of patience, and crypto as a market tends to tire out, the retail buyers and sellers. It takes a bit of time for people to sort of adjust to it and realize, when people are saying buy the dip, everyone's thinking, yeah, let's buy the dip. And then you realize Bitcoin just accumulating here for ages, and everyone gets tired, everyone starts exiting their positions, all of that stuff. So yeah. And last but not least, we shall come on to quite a horrible chart right now, the S&P. Not nice, even me just opening it here, you guys can see daily is very consolidated. You got a bit of a strong move down here. I'm sure a lot of people thinking, bearish expansion, etc. But let's zoom out for a second, right? Let's start off with the monthly time frame. As usual, new month, we like to do that. Coming from this type of sweep, we anticipate that price will trade high in the following month. So it did take the previous monthly high. However, it didn't, give a lot of expansion that way. Right? So we just come back into the range. With a close like this, I think it's important we mark the previous monthly low, which is going to be this low. And we can, possibly mark some sell side targets past that. Now, what I would consider from here is that I think is likely, again, if you come out to the monthly, is that price, if we trade a bit lower and we sweep previous monthly low, we'll be able to take both these lows. If we take previous monthly low, this low is sort of too close, in my opinion, proximity wise to not really take. Otherwise, it would just be a bunch of, clustered wicks here. When I look at this chart, we come on to 4 hour, and we've left this nice accumulation here. I think this is going to be essentially a market maker buy model, right? You've got your accumulation, reaccumulation, maybe you count this as a reaccumulation. So if we know that this is going to be a market maker buy model, well, that's what we expect, then we also expect the SMR. And if we zoom out, we know this is accumulation, so we'd anticipate AMD, right? So I would anticipate, again, price is likely to come provide some sort of liquidity sweep first, which is going to be your previous weekly low and previous monthly low, and potentially past that. And then from there, I would expect the turnaround and the expansion all the way back to the highs. But yeah, guys, keep it simple. I think the bias is actually all right. I think the market's picked up. I know this week specifically was a bit funny. It happens, right? It's traded back into the range. Even on the DXY, bear in mind, a lot of people get caught in this accumulation. Like now it looks obvious, oh yeah, this is an accumulation. But when this is occurring, you're thinking, high to low, retracement, back down. Okay, nice. Then when, prices come down here, you're thinking, okay, cool. From this big fair value, we're going to short it again. Doesn't offer that. Then finally, it runs the highs over here, runs these highs and pushes back down. Now you're thinking, okay, let's short this and go all the way down here. Nope, doesn't short it. Goes back up, back down, back up. Right? Not nice price action. And it's very hard to tell this an accumulation when you're there in the moment. Because, you're seeing this as, okay, cool. This is the first move. Then you think, okay, cool. The second one, maybe this is just a deeper retracement to then go down. Here, this is where you're probably expecting the real expansion on the Tuesday. And then price just goes back into a range. So it's a lot of back and forth. And by the time you're somewhere around here, then you're like, okay, you know what? We can start boxing the 4 hour off. This is an obvious accumulation. By then, potentially you might have done some damage, but it's not the end of the world. I'm just saying, with accumulation, it's hard to anticipate them sometimes. We were getting pretty clean delivery. The accumulation comes and, it throws a lot of people off. But usually, just bear in mind, accumulation will step back. We know the next logical step is manipulation. I think we're in that process now. And after that, we would anticipate the distribution low, especially with these sort of clustered lows where price refused to sweep the lows. You know, you've got 3 relatively equal lows and of course our major target below that. So, you know, I'm pretty confident in our DXY hypothesis. It's just a matter of patience and understanding, okay, where exactly are we going to place the sort of high of this range? Where's this new swing high going to be? And like I said to you guys, just, you know, based on logic and practicality, we don't have a lot of space to keep digging into this range. So I would anticipate that when this new week comes, we're going to sweep the previous weekly high, obviously, probably go a bit deeper into the range and this weekly order block. But once we're here and we have all these big news drivers, ADP, NFP, etc., and they're going to propel price one way, I would bet that it's going to be this way. And we're going to get that nice AMD downwards, right? So yeah, just keep it simple and let price fall into your hands. Don't chase anything. You know, don't try to be one of those cool guys or something thinking, okay, I'm going to catch the high of the month, right? Before it's even giving you confidence. You can catch the high of the month, but you need to make sure you wait for adequate confirmation. You know, you're doing it safely and, you know, you're managing your risk. You're not just gambling on it, right? Because you wouldn't ever want to be in a position where you're like here thinking, okay, yeah, obviously price is going to reverse down. NFP comes and you get a God candle that way. And then it absolutely just smacks you up. That's not the hypothesis I want, but it's just a reality. Sometimes price is very unpredictable. Even the data points are unpredictable. And, you know, it can be difficult to trade if you're not managing your risk. Especially around these bigger news events, you can get a lot of slippage and whatnot. But of course, I'm sure a lot of you guys know that. But yeah, guys, that is it for this weekly outlook. As usual, any questions, anything I can help with, just drop me a message.